we are only covering 3 different variations of a double bottom, but there is there is about 5 to 6 different variations, and every single one of them are in the book. Learning to understand the setup itself, that way, when you see it in the chart, it will be a lot easier to interact with it. Okay, so a lot of us see different variations of double bottoms, but we fail to understand what kind of double bottom it is, simply because the second head is lower or the second one is a bit higher. But because we're so used to equal bottoms, we don't take this for what it is. We don't acknowledge it for a double bottom. Okay, so these are the variations. So we got the first one. Okay, that is the equal bottoms. All right, so let's pull this up real quick. All right, so let's do this real quick. So we're gonna draw this out. All right, so let's go ahead and just go over this first double bottom before we go to the chart. Okay, first double bottoms we're talking about is when you have 2 equal lows, right? So we have market falling, it stops here. All right, very simple. Okay, and then it goes up. Let's go to yellow. It goes up, boom, stops. Okay, and then it falls, boom. Okay, so now the first area where the market went and stopped at, okay, is that turnaround point. That's where the zone is placed. So because market stops there and went up, all you have to do is just throw a horizontal line. Okay, that horizontal line is considered as your zone. All right, now if you want to call it a support zone, by all means. You want to call them supply and demand, by all means. But there's no need to name them, because if you give it a name, you might get too attached to it. If you understand that's just a zone, okay, and all I have to do is just simply wait for when market comes to that zone. Okay, remember this zone on a daily, weekly, or monthly time frame. Once market comes to that zone, while you're waiting for it on the 4 hour, and once it hit that zone, you're just gonna wait for your bullish engulfing price action. That's it. Okay, that's it. Once they give you that bullish engulfing price action, right, you'll just join it. Now, to give you a better understanding of what type of price action the market is going to give you, all you have to do is look to the left. Okay, you look to the left. Why are we looking to the left? It's very simple. Market sold, stop at a specific point, price point, and it bought up. We marked that area. Now, before that market bought, it gives you a specific bullish engulfing candle. Okay, yeah, it gives you a specific bullish engulfing where it could consist of 1 or 2 or 3 candles, or one candle engulf the last 2 or the last 3. All right. Now, if let's just say hypothetically you had a 2 candle, right? We had a 2 candle engulfing, a 2 candle engulfing. Let's just put it. Let's just say you have a 2 candle engulfing that will look something like this. Okay, we're gonna go with this, so it will look like this. That's the last selling candle, right? And then you get a 2 candle engulfing. What I mean by that is it took 2 bullish candles. Okay, it took 2 bullish candles to engulf the last selling candle, indicating that, hey, buyers have now taken control. So if this is and also this is where you would have entered for your buy. So let's just mark that right here. Okay, boom. So let's just say this right here is the PA. Okay, price action. This is the price action the market give us. Right here. Okay, this is the one that the market give us. All right, that's what we had there. So when market comes to this zone right here, okay, when it comes to this zone right here, we look to the left to get a much better understanding of what kind of price action the market might give us, or how long it might sit at that level. All right. Now, if the market gives you a 3 candle price action, where you got 2 bullish candles that engulfed it, right? Anticipate market to either one give you the same concept where it will take 2 candles to engulf it, or it will sit, right? It will sit there and then give you that bullish engulfing to go. Or after you got that bullish engulfing, it might give you a smaller bullish candle, and then on the third one, it'll go up. So if it lagged there, meaning if it sat there, it might do exactly the same thing. I'm sure a lot of you traders out there, when you take a buy, you notice that the market just happened to just sit there. It could sit there for extra 4 hours. So you took it, let's just say you took it at 9 a.m. and it's still there. At 1, it will still be there. That's 4 hours later, right? And then from 1 to 5, which is the last 4 hour of the day, and it will just shoot up or just start buying up. Okay. So that's pretty much what I mean by that. So whatever it did to the left, anticipate the same thing. So don't assume, right, or think it's just gonna just buy up right after you take that trade. All right. Very simple. All right. So that's the first one. So that's a equal lows where both bottoms are about the same level. So however way you get, well, I mean, however, whatever price action you get, you just, take it for what it is. Okay. Just take it for what it is. And like so. And then of course, stop loss will be at your last low. Okay. SL will be at the last low, either the next structure low at the bottom or the wick low. Very simple. So that's right there is the first variation of a double bottom. And then let's go ahead and cover the next one. Let's put this away real quick. Collapse it. And put it to the side. All right, cool. Now, the second double bottom we're going to go over is this one. We got boom. Market stops here, right? And then it went up like so. Stops there. And then it came back down and then stopped right here, right? You see that? Now, remember, market sold, okay? And it stopped there because that's where it stopped at, which is going to generate a zone. All right? All we're doing is just marking that area. That's it. We simply marking it for when and if it comes back. It could take days, weeks, or months. Now, please remember, these setups, these zones are being marked on the monthly, weekly, or the daily time frame. Okay? Once you mark your zone on the highest time frame, monthly or weekly, and last daily, you drop down to the 4-hour time frame and just simply wait. That's it. Okay? Now, and also, again, a little bit of cheat sheet. I'm giving out a lot of free games. When you have that zone, either the monthly, weekly, or the daily time frame, I guarantee you, I guarantee you the last 4-hour candle will close at that zone exactly either at 1, 5, or 9. Now, I am in Florida, so we on the Eastern time, right? So it might be different for you guys, but when you back test it, just take a look at that time, right? Look at the last bearish candle. Okay, like literally, you can look at the month and you can look at and see at what time the candle closed. All right, you will notice that. Okay, and also literally, it's always going to be if it's at the end of the day, right? Or it depends. Sometimes how the month end, it could be like on a Tuesday. But what I'm saying is normally it'll be 5, but for the most part, when the 4-hour candle hit that zone, it will be 1509, right? So this is a double bottom, right? Where the second hit, okay? The second hit itself did not hit the zone. A lot of time, the candle will look something like this, where you get a wick towards the zone, okay? Or it will just, be just a regular candle, like so. It just did not went towards it, but it's still within the zone itself, okay? All you're waiting is for a price action to turn around, to take that buy to go to the upside. Now, of course, again, this is a setup you would look for and identify in the highest time frame, monthly, weekly, and the daily. All right, which clears out real quick. All right, boom. So when you get this, sometimes again, like I said, you might get a last bullish candle. A last bearish candle with a wick, or it might just stop. So let me just throw that in there. I'm gonna draw it out for you. That way you have a much better idea. Okay, so let's just say these right here, all your selling candles. Okay. You could get something like this where you have an extended wick. Okay. Like so. Okay. So that's how that would be. All right. Now, I'm going to go over how to mark the zone, of course, but just so you have a much better understanding of that too. So like when you um, mark in your zone, you always want to use the line chart. That way you get to understand the exact turnaround point, and then you get the wick for liquidity where you get the full zone. But I'm gonna come back to that, but I just want to make sure you understand that. That's how it would look like. Okay. Now, this is variation number 2, where the second hit, right, is a little bit higher than the previous one. Okay. Just like before, once market get to this area, you just simply waiting for your bullish engulfing to pull the trigger. Now, of course, once market get to the zone, you want to look to the left. It's rinse and repeat, right? When market comes to the zone, you want to look to the left. And why are we looking to the left? It's very simple. We're looking at the past, right? We want to see what it did last time. So when it gives us the same thing within current time, so we just take it and join the market. That's it. Understanding the past will allow you to have a much productive, successful future. Okay. So we look to the left. So that's variation number 2. Believe it or not, you could get the same type of price action. I'm just going to throw that in there, right? So you see how the wick looks. So basically, if you guys did not understand the characteristic of candles, video is on YouTube, but I'll show you real quick. So a bullish candle typically sells first, right? Characteristic. What does it normally does first? So a bullish candle will do something like so. Once it opens, it will fall, right? And then it'll go back up and then to close. All right. So the body of this now, I know, let me make it more of a bigger bullish candle, right? So it will look like this. So now with that's just how it would look like with the bars, right? Because it opens here, it's sold, generating a wick, and they went above, generating a wick, and this area is where it's closed. So let's just change the colors. That way you can stand out, right? So it opens here. That's the lowest it went. That's the highest it went. And that's where it closed, right? So if I create a body for this candle or that candle itself, it would have looked something like this, right? From here and to here, okay? And like so. You see that? And the wick will be this. That'll be the wick, and that will be the wick. See that? So just so you guys understand that. So you could get a bullish candle with an extended wick to the bottom, all right? And of course, sometimes you get more than one candle. So that's just price action itself. So that's variation number 2, and let's lock out variation number 3. All right. Variation number 3, I'm sure you guys seen it before, but is when the market itself, right, give you a low that's lower than the previous low. So let me not just say it. Let me go ahead and show it to you also. All right. So look, this is market selling. Okay. It fell. Boom. It stops here and it bought up. Boom. Since it stops right there, I'm just going to mark that area as a key level. That's a zone. Okay. It's a key level. Remember, we don't care for the name. It's just a zone. Our job is just to simply read and react off the zone. And the reaction is based on what the market gives us, taking it for what it is. So we put that zone there for when and if market come back to the zone, right? So we could react again. Now it bought up. Now we waiting for the market to come back to the zone. A lot of time when market come back to the zone, it will go past the turnaround point. Okay. It'll go past it. Now, by how much? It varies. Okay. So I could minimize this just a little bit. Like so. All right. Perfect. Right. You see how it went and closed below, right? And then we will look to the left. Again, we always look to the left simply because we want to understand what the market did last time. And based on what it did last time, we can anticipate for it, for the market to give us something identical to it. Okay. If it give you a 3 candle price action, or where it took 3 bullish candles to engulf, or it took 2 bullish candles to engulf, just anticipate the market might sit there for more than just 4 hours. It could sit there for 8 hours or 12 hours and then to buy. All right. Now, a bullish candle will look maybe something like this. Just generate that for you. So these will here will be your selling candles, right? You see that? Boom, boom, right? So I'm just going to give you one variation, which is the most common node when it comes to the bullish engulfing, where you get a single candle that engulf the last two. Okay. Now I know it's below the zone, right? Because that's the exact turnaround point, but that is a bullish engulfing within the zone. Now, I have to go over how to draw the zone. We're going to run through it really, really quick because we don't want to stretch out the video for too long, right? Look, I'm going to start with this because I need you to understand how this might look like with the candles itself, right? So let's just go ahead and create the last bearish candle and how it might look like, okay? So the last bearish candle could look like something like this. You see how it's right here? Just like the last one, right? We're just going to generate a wick. Boom. You see that? That's the wick of it. Now, when you draw in a zone, right, you always want to start with the line chart. Okay? You always want to start with the line chart. Why? Because the line chart shows you the exact turnaround point. So if you're asking me what do I mean by the turnaround point, I'm talking about where the candle closed exactly, where it stops at and then reverse. Okay? So this is where the candle stopped at right here. See that? It stopped right here. So it went down, came back, and stopped right there. So this right here will be the turnaround point. That's the first zone. The last part of the zone is the wick, the liquidity area, right? So within the wick areas, if you take a buy, of course, we know we look at the last low to place our stop loss, right? So if we enter here for a buy off this bullish engulfing, that, not just any bullish engulfing, is a bull candle that engulfed the last, the last two selling candles, okay? It engulfed the last two selling candles, all right? Now, when you enter here for the buy, you look, let's do yellow, right? When you enter up here for the buy, you look at down here for this your stop loss. Now, we're going to continue with the zone. Normally, when you place a zone, you use the rectangle property, I'm sure that's what most of you guys was taught, which is okay, right? Is that there's absolutely nothing wrong with that. That's because I'm hoping you guys, when you guys are placing the zone, you start from the close point and then going all the way to the wick. It will look like something like this. You see that? So market is still within the zone itself. Okay. It's still within the zone itself. So we could tap into this real quick. All right. Since we just for the zone, okay? Zone. All right. It's just zone placement. Okay. Zone placement. All right. So that's what we're doing. So again, when it comes to drawing your zone, I'm going to go through this real quick. You want to identify the candle itself, right? These are the selling candles, all right? Boom, is falling. This is the wick of it, right? And then we got bullish candles, right? In the case of this, we have a three bullish candles to engulf the last selling candle. Boom. So your entry point, of course, will be right there. But since we focus on the zone, so this is what the market gave us before it bought up, right? See that? So when it comes to drawing your zone, you want to go from closing point, which is here, and then turn around like that little highest point, right? So that's the turnaround point. That's the way it closed at. And then the lowest it went, that's the wick itself. So this is your zone. Me personally, I just like to use the trend line. I like to use the trend line where I put two horizontal line. But again, there is absolutely nothing wrong with you using the rectangle property to draw your zone. Okay. Now I want to make this very, very clear. Okay. These zones are placed on the highest time frame. You're marking the zone for the setup. Okay. So we're just simply waiting for it to come back. Now, the next lesson I want to throw in there real quick, right, is one of the dopest part about placing your zone in the monthly, weekly, and daily time frame, your chart won't be crowded. All right. You're gonna be a naked trader. Basically, your chart is gonna be completely naked. Now, when it comes to placing zone, you should only have, you should only have at most maybe 5 zones, right? So let's just say this is a selling trend, right? See that? See how that looks? So market sold and they bought, right? See that? Like so. See that? Now, this is how the monthly would look like. Let's just say, hypothetically speaking, market comes down, okay? And this is where it's at the, well, let's back up just slightly a little bit because I want to do all right. This is where it's at the moment, okay? It's currently right here, okay? This is either the monthly, the weekly, or the daily. This is currently where the market is at. When you mark in your zones, you want to get at most, at most 5 zones. Why? You want to get the top 2 closest zone, right? So we have here, okay? And then we have up here. That kind of goes hand in hand with that. Then we have this zone, right? See, right off the bat, right? What do we have? 3 zones, right? And then we could tap in here and here, right? Look, that's pretty much it. See that? Now, of course, we do have this also, but if you pay attention, we have how many zones, right? 1, it doesn't matter the order, right? 2, 3, 4, 5. That's it. Okay. Now these zones, please understand, they're on the highest time frame, either the monthly, the weekly, or the daily. That means it is far apart. So when you go to the 4-hour time frame, it's gonna look like this. It's really gonna be far apart. It's gonna be clear. Okay. Your chart won't be crowded. And again, that's what I need you guys to do. Place the zone on a higher time frame and go to the lowest time frame, which is the 4-hour time frame, and just wait for your PA, aka your price action. A clean chart. You do not need 1,000 lines. Okay. No messy chart. Okay. So that's how it would look like. So that's what I mean when I say 4, 5 zone at max. 2 top closest, 2 bottom closest zones. And of course, the one that is heading towards at the moment. Okay. All right. So see how this kind of like hit right there? So this right here would be considered almost like a triple. Well, it could be considered as a triple bottom, right? Because we don't know how the last candle looks with this. So that's how it would look like with the line chart, right? Maybe with the candle, we probably had a body wick like so. So this will be a first hit, second hit, and then this is a third hit. So it's like a triple bottom, meaning it hit that same zone 3 times. Okay. Now we understand trend reversal, breaking retest to go back down, but also when and if it comes to this area, 4-hour time frame, we will look for a bullish price action for it to go up. Now we don't know exactly how high it might go. It could literally go up to here because of this, right? Or coming straight to this zone. You see that? You don't need that many. Just 4 to 5 zone, okay? So I just wanted to cover that real quick on how to draw the zones and why we place in the zones on a higher time frame and the benefits of them, getting the bigger picture of the trend of the market, make more money. You have more free time to sit and just chill and wait. And then when you drop down to your 4-hour time frame, since you're waiting for a price action on the 4-hour, it's a 4-hour increment, okay? You could do a lot in 4 hours. Not only that, you could time it exactly when to go look at the chart. 1509, the Royalty FX Academy way. Okay,